Hello, good evening and welcome to Business Live. Coming up in this bulletin, Fitch Solutions reveals Ghana's banking sector is vulnerable with high bad loans. What factors are driving this trend? Can it be reversed? We'll soon be finding out. Also in this bulletin, World Bank forecasts crude oil price to average $64 a barrel in 2025. Will this affect our revenue streams from the upstream sector? We shall be discussing that. Last, local beverage manufacturers urged to consider establishing presence in African markets to sell their unique beverage products.
As far, winning the Ghanaian market, but let's conquer West Africa, let's conquer Africa, and let's conquer the world.
We have details of this and more lined up for you. Please stay on. Thanks so much. You could stay on. I am Pius Kojobaka, and looking at our stories. Ghana's banking sector is particularly vulnerable with a high non-performing loans ratio of 21.8% and a capital adequacy ratio of 14%. This was captured in Fitch Solutions' latest report. Here's more.
According to Fitch Solutions, this is as a result of the domestic debt exchange program and high interest rates. In its paper titled, U.S. Tariffs Increase Risks for Sub-Saharan African Banks, Ghana has the highest non-performing loans among 10 top Sub-Saharan African countries, whilst its capital adequacy ratio is the third weakest. Despite upcoming challenges, it however said Sub-Saharan African banks are generally well positioned, supported by robust capital adequacy ratios and decent loan quality. Fitch Solutions said it anticipates improvement in most sectors' capital, driven by regulatory enhancement in markets such as Nigeria and Kenya, alongside improving economic conditions in most markets. It forecasts that interest rates will fall in 2025 for most markets, which will help improve loan quality. It added that very high profits following steep interest rate hikes in recent years will also provide banks a sufficient reserve for 2025.
All right, so let's expand the conversation further. Joining us via Zoom is a banking consultant, Dr. Richmond Tuahene. Thanks so much, sir, for agreeing to speak to us on Business Live. And Dr. Tuahene, I know you've written extensively when it comes to, how bad our banking sector is in respect to non-performing loans. Ghana currently has the highest non-performing loans ratio among its top African, Sub-Saharan African economies, basically. I want to know what are the factors driving this trend and how worrying is it for the sector?
Thank you very much, and good afternoon to all your cherished viewers. Unfortunately, this is not a new phenomenon. Since 2014, the non-performing has clocked 11% up to 21.8% this year. It's not a new phenomenon, but I don't think we have worked as a country seriously in reducing the non-performing assets. Since 2014, according to records from Bank of Ghana and the IMF, we have consistently deteriorated our non-performing from 11%. In 2015, it was 14%. It climbed to 17%. It went to 18%, it went to 19%, dropped to 17.7%, and then it started climbing up to 20.6% in 2023, and then 20.1%. What is happening is that there is a correlation between non-payment of arrears, especially from the road sector and the energy sector. All these two factors, all these two huge non-performing, the government loans on roads and
energy sector,
energy, all are translated into non-performing. So you can see from two up. And what the literature says that, let me make it clear to Ghanaians, any country with no more than 10% non-performing, your banking sector is in crisis. It's not even vulnerable. It's in crisis. And Ghana has been in crisis since 2015 up to this year. We should make a conscious effort that contractors have to be paid in order to reduce the non-performing of the banks. I'm going to tell you, there's one bank currently, not the NIB. There's another bank which is having 72% non-performing. One of the state banks currently is 72% out of 100 are non-performing. And these non-performing are basically on the local banks, including the state-owned banks,
yeah.
maybe minus GCB. All the rest are having a serious non-performing. So I believe the Minister of Finance, the Energy, the Bank of Ghana, and the banks should sit up. It has happened in 2010. It happened in 2010. What happened was brought the banks together and then told the Minister of Finance and the road to design a way of non-payment plan to reduce it. No matter what Bank of Ghana want to do, if people don't pay, or if the government doesn't pay, the non-performing will come down. And don't forget, whenever your non-performing is bad, then it affects your capital adequacy.
Absolutely.
So it is a two-edge. You have a higher non-performing and you have a lower capital adequacy or the solvency. So it is a very serious thing, and I have written consistently since 2016, and I don't see what are we doing to tackle it.
But what do you think about this move? There are calls that, well, it's about time we merge or consolidate some of these local banks who have, high non-performing loans sitting on their books. Would that work?
You see, you'll be just trying to cover your iniquities. You need to address it, as I've said. You need to address it. It happened in 2010, and with the assistance of IMF, they were able to have a repayment plan for the banks. And that also supported the bank. That brought the non-performing in 2014, 11%. And ever since, contracts are being awarded here and there without actually thinking the impacts on the non-performing of the banks. So until the government, and I believe that this is a very good advice for the government, she should sit down with the road minister, the energy minister, the banking sector, and then give them a schedule of repayment so that it can take us about a year or two. I know the road is about close to 35 billion according to IMF, and the World Bank said the energy is 2.3 billion. If you add them all, at least it's close to be 70 billion. You can begin to do a structured payment to the banks that will reduce the non-performing and improve liquid solvency. Until we do that, I have said consistently, the banking sector is not the best, especially for the Ghanaian banks and the Ghanaian, including the state bank, the private sector banks and the state banks. They are not doing very well at all, not at all.
All right.
And we need to make a conscious effort.
All right, so with Ghana's capital adequacy ratio at 14% now, how close is that to the regulatory minimum requirement? And of course, what are the implications for financial stability, you would say?
We have the regulatory requirement, you have the 10% and the buffer 3%. So if I add the 10 plus 3, and then you talk about 14, it means we are the nearest point of the requirement.
Absolutely.
It is 10% plus 3% buffer. And if Ghana is only having 14, then you could see how serious the crisis is. It is very, very serious. And don't forget, it is mostly with the indigenous and the state bank. The other sector, the other banks, foreign banks, do not normally participate in GOG contracts, Ghana government contracts. They only participate. It is funded by, say, a DFDI or GIZ or the gone USAID. They don't participate. But the Ghanaian banks are being forced to do that because, number one, let me talk about the state banks. Who is responsible appointing for the managing director and the board? It is the state. So when the states sit there and tell you that they are going to construct a road, and the board and the managing director are all captured. We call them captured. Captured means that they don't have the independent minds of their own. So they will go and construct a road, and then the road will not be paid. And straight away, your non-performing shoot up. Another point is that the banks are also weak in credit risk assessment. If you're going to go into road construction, it behoves on you to have expert in road construction. Road construction. What is the measure? If you pay for a tar road, what is the total cost? The banks do not have it. The banks are having the weakest credit risk management. And it's all because it's also coming from weak corporate governance. Because if the corporate governance is weak, automatically your credit risk and other risk management will be weak. So the banks would have to improve it and begin to say that these are depositors' money and we are not going to go into rows. We would prefer even buying treasury bills. The interest rate, as the speech is saying, I think we have one of the highest interest rate even Nigeria has a lower interest rate. And because of the microeconomic challenges, higher inflation, unstable cedi, and then high fiscal deficit, we haven't been able to bring inflation as low as possible. And they also stabilize the currency. It is only the last 6 months that you see that the cedi seems to be stabilizing. Apart from that, you could see the cedi jumping 17 to a dollar, and then it hovers 16, but this time is coming the other way, appreciating. So if you can get inflation down, and I've always said it, anywhere I go, I say until we get the inflation down to a reasonable level, because other than that, we are not going to improve the financial banking sector at all.
Very well. Thank you so much, Dr. Richmond Etuani. I truly appreciate the time here on Business Live, speaking to us on the subject matter. I want to stay a while longer within the financial space because research lead at GCB Bank PLC, Courage Buti, has projected a decline in inflation and lending rates following Fitch Solutions' forecast of a fall in interest rates. Now, he highlighted that this development will support the business community in creating the necessary jobs for society. He made these remarks in an interview with Joy Business.
We've seen at the treasury side of the curve, the correction ongoing. We've seen T-bill rate at the lower sides of 15 now, and clearing the upper side of the curve, clearing below 18. That's a positive sign, and if that is an indicator of cost of funds, then you expect that lending rates will begin to trend down as inflation trends down. Government is looking at 11.9% inflation. BOG is looking at 12% inflation. We've seen cedi stable, in fact, correcting to some large extent in the last few or so months post-elections. All of these bode well for rates to come down, because what it means is that cost of production will be lower for cost of input to be lower for most of these entities, the cost of funds to be lower for banks, and then there will be the appetite to invest more. And given the liquidity in the system and the need for banks, especially when T-bill rates are plummeting and there are no options on the market, banks, if they see correction in the macroeconomy and confidence returning, will be inclined to expanding their loan books, and they would have to compete for prices, really. And that is where the interest rate will begin to come down. So it hinges on a number of things. Inflation is a key part. Exchange rate is another. The general macro outlook is another. And as we speak, I think all of these are pointing to the right direction. So it's a matter of time inflation will follow suit, and we'll begin to see maybe some sharp decline in lending rates across the curve, which will now support the business community to create the needed jobs for the society.
One of our lead stories, the price of crude oil is expected to average $64 per barrel in 2025, and the World Bank has revealed in its April 2025 commodity markets outlook. Well, this is compared with $80.7 per barrel in 2024. More in this report.
The World Bank is forecasting a further drop in the prices of crude oil to an average of $60 in 2025. All things being equal, coupled with a stable foreign exchange, the price of petroleum product will be flat at the pumps. The report stated that escalating concerns about global economic growth, saw oil prices fall sharply in early April 2025 to below $63 per barrel, the lowest level since April 2021. The price slump started with the announcement of large trade tariffs on April 2, 2025 by the United States. This was associated with a $12 per barrel decrease in the course of 4 trading days, the 11th worst 4 trading day price performance since 1990. Although the Brent crude price had declined to $70 per barrel by early March 2025, the net impact of these different factors resulted in a small increase of $1 per barrel in Q1 of 2025, partially reversing a $5 per barrel a day, reversing a $5 barrel quarter-on-quarter decrease in the final quarter of 2024.
All right, so let's understand this revelation better and speak with Benjamin Inan. He is the Executive Director of the Center for Environmental Management and Sustainable Energy. Pleasure, sir. You could join me on Business Live. And I'm wondering how significant will this $16.7 shortfall we have been told would have on our upstream revenue streams, basically?
From the upstream, they are dependent on 2 factors. One is output, and the second is price on the international market. Thirdly, we can also consider a risk assessment measure, where maybe strategically most of the companies or the IOTCs that sell products on the international market may hedge the price of these commodities to make sure that risks are reduced. But for the main purposes, we look at 2 things: output and then price. Unfortunately for us, I think that if you look at our budget, we projected that we're going to sell our crude at $74 per barrel. But today, we are being told that averagely, especially in the second half of 2025, price of these products are likely going to be around $60 per barrel, which is going to be about 20% shortfall when it comes to the output and the price of the product. Now, in recent times, I think the last 6 or 7 years, price of these products have not been, the output of this product, that is crude, has not been favorable to Ghana. If you look at 2019, we're producing somewhere 71 million barrels a year. But as of last year, we are now doing 48 million barrels with a decline of about averagely 7.4%. So crude output is on a decline. Yes, Jubilee is doing well. 10 is also doing well, but Sankofa Nyame is not doing well, and last year we observed about 18% decline in that particular output. So if this year crude production declines and also price on the international market declines, it means that the projection that we've made in our budget, which is around $1 billion, we are likely not to achieve it. The other part is that because the cedi has also begun to see some appreciation against the dollar, what it means is that converting this particular dollar-rated revenue into cedis also becomes a bit smaller. So the cedi equivalent of this particular revenue, as we projected in our budget, is likely going to also be smaller. So we are going to miss out with respect to our revenue targets.
All right. So what do you think we can do to make up for the shortfall?
I think that this year, what we can do, if we had actually done it, is to hedge the prices to take care of some of these uncertainties in future. I don't know whether we've done that. If not done that, it means that we are late. Maybe in future, we need to have the necessary investment in the sector to boost production, or maybe begin to review our upstream sector to attract the necessary investment. I think the last time the discussion has been that some of our arrangements or agreements or contracts within the upstream is not the best, so it doesn't attract the necessary investment in this particular sector. We need to reform the upstream to ensure that the diversion of investment from Ghana to Guyana and other countries within the sub-region is redirected back to Ghana. That is what we can do. But for the 2025 year, I don't think that we'll be able to meet our revenue target, and there's nothing much we'll be able to do
All right.
to maintain dividend.
Thank you so much for your input at this very moment. I truly appreciate it. You're still watching Business Live, and we have more for you after this short break. Hello again, welcome back to Business Live. Local beverage manufacturers have been urged to consider establishing presence in other African markets to sell their unique beverage products. According to the acting chief executive of the Ghana Tourism Authority, Mami Ifua Wajeto, local beverages can be used to promote Ghanaian tourism as well as earnings from some foreign exchange. She was speaking at the 9th Ghana Beverage Awards in Accra, where Bell Cola emerged winner for the Product of the Year.
The Ghana Beverage Award is organized by the Global Media Alliance to celebrate outstanding beverage brands that excel for the year under review. According to the Ghana Tourism Authority boss, Mami Ifua Wajeto, Ghanaian drinks are widely accepted as one of the best in markets across the globe. She therefore used the occasion to call on manufacturers and producers to consider more effort in penetrating various African markets as a form of marketing the country.
Our local drink. And I would encourage everybody here not only to aspire, winning the Ghanaian market, but let's conquer West Africa, let's conquer Africa, and let's conquer the world. I believe that alone will not only bring you the money, the wealth you're looking for, but it also markets Ghana. It takes us places, and your product is what will champion tourism for us.
Meanwhile, Executive Secretary of the Food and Beverages Association, Samuel Agre, is calling on government to implement stricter policies to prevent the influx of inferior drinks from other countries entering Ghana through unapproved routes.
Once we are doing that, we are hurting the local industries, especially those products that are being produced in Nigeria that is also produced in Ghana here. Let me be emphatic, like something like malt and coke. All these products are coming in at a cost to the local industries because the cost of production in this country are very high. And people chance on that to bring in these products from other countries to come and sell here at a cheaper cost. We don't want that to happen. We need to be very restrictive, control the market that we have to make sure that whatever that we are producing here, we also be able to export to the other countries.
Some of the award winners attributed the achievement to hard work and innovation.
We are a legacy company. We believe in the people. We believe in knowing what they want, understanding what they want, and giving them what they want. And that is how we have been very solid over the years to come. So yes, even though there are influx of brands, we believe in giving quality, and quality always stands out. So we are still going to continue doing the amazing things that we have been doing. And there's always more to come, more innovations to come, more exciting things to come.
You should expect innovation. You should expect new products from us. You should expect more limited edition to keep people excited, to keep people enjoying Johnny Walker and Baileys in a responsible way, of course.
Congratulations, Johnny Walker.
The Executive Director for Wholesale Banking at Access Bank, James Bruce, is advocating aggressive policies that will position Ghana as a manufacturing hub to attract businesses from the U.S. Now, his call comes after the U.S. President Donald Trump imposed heavy tariffs on countries in Asia where over 50% of global manufacturing takes place. Now, he believes that countries such as Ghana stands to gain considering the low tariff rate of 10% compared to countries in Asia. Mr. Bruce spoke to Joy Business at a trade forum held in Accra.
You have to look at it from both a risk point of view and an opportunity point of view. So let me use a scenario. If you are a Far East Asian country and you produce textiles for the United States, the tariffs for the Far East Asian countries are between 50 to 60%, China being the highest. The tariff for Ghana is 10%. So what's going to happen? It will be cheaper for investment to move from Asia to Ghana to produce T-shirts, clothes, shoes, and everything, for it to be exported to the United States at 10%. So that's an opportunity. Now the question here is, do we export enough for America to slap tariffs on us? Not necessarily. And traditionally, we haven't been a significant trade partner to them, apart from chocolate and gold. So for us as a risk, there's a risk there, but it's not significant that will shut the economy. But the opportunity side is far larger for companies in China, in Vietnam, Taiwan to move and produce here and take advantage. We already had AGOA where our textiles were going for free. Now it's going to go to 10%. So it's an opportunity for us.
So you think government should be targeting those industries there?
I think government is already talking about it now. I mean, you hear about reducing our import bill for chicken from 400 million. You hear about coding, which means that if we're creating 1,000 coders, they are going to be creating software, they are going to be helping do chips and everything. So government is in the right direction. The key thing is that the private sector works with government together with regulation and the financial institutions. And then we can take advantage. It's an opportunity from where I sit. The risk minimal, but it's an opportunity if we are going to take the right bets for me.
That's it for Business Life. I am Pius Kojobaka.